Eddie, we were just hearing a lot about the US CPI. We'll get back to that in a moment. Just because we just had the data, let's focus on the UK CPI story. So UK CPI, both core and headline, coming in a little lower than had been expected. A big step down from last time. That was highly anticipated. That was expected. Politically, Rishi Sunak now claiming victory on inflation, bringing it down from above 10% to below 5%. So saying he's cut it in half, essentially. We're seeing some movement in the pound as a result of this, but not as much movement in the pound as we saw yesterday on the back of the US CPI data. What do you make of the UK story?
Yeah, absolutely. And, the base effects that we had in the UK, the energy costs that went up so much last year fed through heavily into this month's reading. We saw CPI coming down by the most in, I don't know, something like 40 years. But for the markets, what matter is that it was even lower than expected, right? And as you say, we missed on core, we missed on services, and therefore you are seeing the pound coming back a little bit. We're seeing rates coming, reacting. But I think you're right. I think what is really interesting is that we're not seeing anything like the reaction that we had in the US yesterday. It's a 10 basis point miss here. It was a 10 basis point miss there. But the market, there was a completely outsized reaction in the US. In the UK, though, the market reaction fairly muted. I think that's probably because the market was expecting, quite a big decline in inflation in the UK anyway.
Yeah, really interesting. And give us your take on that US CPI print of yesterday then. We saw the market move to price in another cut as a result of that. Do you agree with that, where the market is? Because the market is expecting fewer cuts than some of the big Wall Street banks.
Yeah, the market might be expecting, some fewer than the rest of Wall Street banks. But I think what has happened here is that the market has priced out any probability of a hike, right? We're just not seeing hike in the UK, in the US, because there is, inflation is cooling. But at the same time, that leaves you with a lot of scope on the downside. And I think the market probably overpricing cuts. Something like 4 cuts priced for next year. That seems unlikely unless there is a recession. If we get that soft landing in the US, as many people still expect, and it looks more now likely with inflation coming off on its own, you're probably not going to see those 4 cuts coming in.
Just briefly, Eddie, natural gas prices in focus. Weather's getting a bit colder here in Europe. What should we expect?
Energy costs matter a lot for inflation. But of course, I think this year Europe is in a much better position. Natural gas prices has a lot of room to the downside still because we are very, very full. I don't think that that's going to be an inflationary play this year.
Thanks so much, Eddie. Really good to have you on the programme. Eddie van der Veld joining us from the Markets Live team with his thoughts on the markets.